Welcome to Buy, Hold, Sell. My name's James Marley and we're going to talk about some of the big stocks and some of the high-flying names that have come under some pressure. I'm joined by Steve Johnson from Forager and Roger Montgomery from the Montgomery Fund. Roger, I'll start with you. It's had a great run. Magellan, it's highly leveraged to the stock markets and it's come back a bit lately.
So volatility does two things. Because these stocks themselves are leveraged to movement in the stock market, sentiment shifts very quickly. That can provide an opportunity. But what volatility also does is obviously change flows. And if your inflows start to slow down, then arguably lower prices or valuations are justified. We think this is a business with enormous potential. We think Hamish is doing a great job. He's not going anywhere in a hurry. But given the price drop, it's still not cheap enough for us to be aggressively buying it. So it's a hold.
It's a hold. Magellan, it's had a great run, but highly leveraged to markets.
As an owner and runner of a funds management business myself, I'm humbled by what they've achieved. I think that the track record over the past 5 or 6 years has been extraordinary. They've also been in a very good space, and I feel like that space, in terms of the thematic for Australian investors, is coming to an end. You're going to see a lot of international guys reporting some pretty big negative numbers soon if the currency doesn't rescue them again like it has over the past few years. And I think that's going to make people start questioning this whole theme of I've got to get offshore, I've got to get offshore, I've got to get offshore. On top of that, they've done a wonderful job of investing in these big global brands, and I think a lot of those businesses, like we've already talked about, are quite expensive now. So I think the ability for them to keep generating these great returns is going to be diminished as well. I wouldn't underestimate their ability, though, to keep growing this business. So it's a sell for me, but it's a wonderful business that I would like to own at the right price.
Okay. Ramsey, it's been one of the all-time great performers, grown profits every year for the past decade. Buy, hold or sell?
Yeah, again, never owned it and wish we had. I'm going to say hold because the price has come off quite a long way. I still don't think the stock is screamingly cheap, though, and I think the space, again, has some headwinds in Australia. You've got this underlying thematic of more and more spending on healthcare. You've also got the government saying we just cannot accept these costs going up at 10% a year forever and we need to do something about it. You've got the health funds trying to do a little bit of the same thing. So there's a few dynamics at play there that make me think the next decade's not going to be as easy as the last one.
Okay. Roger, Ramsey, buy, hold or sell?
We have owned it and we've done very well out of it, but we've a short while ago sold it. Reason being, we think management will now be distracted by a couple of things. One is the expansion in France. That's going to prove a distraction. And now what's happening is you've got this sort of three-way relationship between government, insurers and hospitals. And what's happening, what we're seeing more is a dialogue or narrative around hospitals charging too much, for example, for prosthetics, and much more than overseas hospitals have been charging. The insurers are bringing that to the government's attention, and obviously it's in the insurers' interest. So it just looks like the dynamic in the narrative is shifting towards the insurers and the government and away from hospitals. That's going to lower their margins at the same time that it distracts management. So we've recently sold it, so it's a sell for us.
Okay. Origin Energy, out of the top 20, it's had the hardest fall. Is there a business within that you like, Roger?
No, look, we haven't touched it and probably won't. One of the things that a lower gas price and a lower oil price has done, which has surprised everyone, is it's brought down the cost of production globally. And what that means is potentially a continuation of lower prices for some time. This is a business that has negative free cash flow. It has an enterprise value of $19 billion, even at the current price of around $3 after dropping from 13. So for us, it's a hold at best and probably a sell.
These distressed situations tend to catch the attention of value investors. Steve, has it got your eyes?
We've been looking. We've had a good look at it. My concern here is the debt. Roger already touched on the enterprise value. The reason that's so high is because there's a lot of debt in the structure. I'm a bit more optimistic about the long-term future for the oil price. I think we are seeing the market adjust quite dramatically to the level of oversupply. I don't know whether that's the end of this year or it's next year or it's 2018 until things get back into balance, but I don't think you're seeing capacity added to the market at today's oil price. It needs to be higher. I'm not sure, and this is a crazy thing to say about one of the biggest businesses in the country, I'm not sure that this business is going to be there to get the benefit of that, at least in its current state. They may have to take some drastic measures here to deal with the debt situation. We've already seen a capital raising. It didn't do enough for mine to fix their problems and give them the robustness that you need to get through this type of market. So
Sounds like a sell.
Yeah, look, I don't know if I would sell it if I held it and maybe that's just my psychology at play because the share price has fallen so far, but we haven't been able to get anywhere near keen enough to buy it. So I probably should say sell.
Okay. Steve, is the one that's been trashed that you think has been unduly treated?
I might scare away all of you viewers here. So this is a speculative, I will say, position that we've taken recently, but we have added Whitehaven Coal to our portfolio. The share price is down a very long way. It's another leveraged player, but at the low end of the cost curve in the coal market. We think that what you're getting is a very cheap option at today's price, that things work out better than the world is anticipating at the moment. You may lose 100% of your money. You want to be really clear about that. You may make 5 or 6 times your money on the upside. I can easily envisage a scenario where that happens. So we've taken a relatively small position on the basis that it's a very cheap option on things, on the world probably not being as bad as people are anticipating at the moment.
Roger, is there something in this market that you think has been beaten up and trashed that didn't deserve it?
Sadly, not yet, but we've got plenty of cash and we're waiting for the opportunities.
Okay. Well, a few ideas, but still the big end that's been beaten up is not looking that attractive.